Hey everybody, welcome back. Well, we have a lot to go over. We're going to start with the S&P and what happened today. First and foremost, you can see 52.62 is where we're kind of floating around right now. And I think that's kind of important. We're not really melting down, but we do have that lower low there. And I'm not really too crazy about the idea that we might start making that lower low. And now we got Wick City up here. We're going to drill into that a little bit more. There's some things going on that we should definitely talk about. And usually when we get an up, down, 1, 2, 3, up, we want to see that follow through. We didn't get that. A lot to go over. Let's just jump right into it. And then we'll go through all the topics later. But there's just too much to really review here. So if we take a look at what we did over here in the hourly on Thursday, March 21st, and then we tried to get over, and we were just really unable to do that, weren't we? We were up for a little bit, but if you drill into this and just blow up, what are we looking at here? We're up and over. Now we have the hourly, and then we just go sideways, right? And that's been pretty exhausting for a period of time. And I think people are starting to understand that you're not in the same market that you once were. Now, if you want to say double top, that's fine. I don't really care what you call it. But if you take a look at that, you ran right back to the level and you're unable to get above it. And we've had some major cracks today in some of these indexes, specific sectors that we're going to talk about, and other sectors are shining. But this is what we're dealing with. Now, one of the things that I do like to use is I have this cloud system, and you are all familiar with it. I'm just going to drop it in. And essentially what I like to see is, for all intensive purposes, the major trend for me is just when I have, let's just get rid of this, and we'll get rid of the 20 EMA, which is on the hourly. But when I just have the yellow and I just look at the major trend, this is very telling to me. For example, if I just zoom out on this, you can just see all the green, right? And you can see when it flipped in November, green, those periods of red, or yellow rather, for caution. I mean, it's not rocket science, why they're green and yellow. But you can see how they're flipping, and then you can kind of see when that happens and when it reverts, that there's an opportunity cost there of not being in the market versus when it's yellow and it starts getting wider and wider, you want to pay attention to that. What you definitely don't want to see is exactly what we're having, where you're making lower lows and that this cloud is actually getting wider. The wider the width, the greater the move is coming. So this is definitely... I'm not going to say it's like a red signal, but you have my attention. You certainly have my retention. Now, I don't really look at it on a 4-hour that often, but I do look at it on a 4-hour. And I'm going to show you this for a reason. This is back when Powell spoke. Remember this. Again, we always talk about the stool, and I'm not going to bore everybody with the stool, but there was a macro event here. Powell said we're not going to raise rates anymore. And since then, on the 4-hour, there was only one period of time this was yellow, and that was right in here. And that was just probably tax selling, right? You had all those people that had huge gains, and they just wanted to lock it in. So if we go and take a look now, well, now you are below again, and we'd have to say, okay, well, how long are we going to stay here? I don't know. I don't have an answer for you, but I do know that we are making a lower low. And if I come here and I look at this particular pattern, how many lower lows did we have since the 24th? And the answer is, okay, no. I'm going to stop saying no because it's going to get exhausting. And you're going to see that we have one right here. At least I made myself laugh. But let's drill back into this on the hourly. And you can see what we're seeing. Call it a double top and you broke, call it a blueberry for all I care. But the bottom line is you're getting to a point where you're getting into some issues here. And we're starting to see that in the sector rotation. We're going to talk about that in a minute. Overlay this with the NQ. Obviously, the NQ is going to be a little more volatile, and you can just see that it just is. It's tech and biotech. That's all it is. So it's not going to give you the same feel that we're going to have here. Throw this into RTY, and it's going to look like an absolute disaster, right? And you can just see what's starting to happen here. And again, this is not really what you want to see, where you're rallying up to it, rejecting, and getting wider and wider. The wider this gets, the heavier it gets. One of the things you can always think about for those that use this is, sometimes I will come here and just throw on like an Ichimoku cloud. I did some videos on these a while back, but this is a great time to kind of look at this. Let's clean this off and get rid of that drawing. And you can see this on the daily, but if you look at these on an hourly or a 4-hour, what you don't want to see is what you're starting to see. And what you're starting to see, this is RTY. I know you can't really see that clearly. Maybe we can make that a little better. And then what I'll hear is that the time is reversed. But, that's all we can do. We can only do so much, right? So we're going to take what we can got, and that's going to be it. So here we are, and we can see how we're widening out. See it? So this is just the cloud, Ichimoku cloud. I do like this. To me, it is a leading indicator. It is something that I pay attention to. I'm just, candidly, see how you ran right to it and you rejected? And then you count 26 from there. And this is really where you start to get those days. I forget. I think it's 26, right? 26, 28. But yeah, it's 26. But you start to see that right there. And then you get your signal. And that's pretty much it ever since. Is it perfect? No, nothing is perfect. But it's certainly something that you're going to want to pay attention to. See how it's getting wider? that's a problem. Okay, now you didn't flip on the 4-hour yet, but you're starting to get there on the 4-hour. And again, this would have led you into this, that you're going to have a period of underperformance. Let's look at this on the ES, because this is really what I want to show you. So if we take a look at the ES and you go back to November, you've only had one period where you were there. Now, when you're in the cloud, you underperform. You do not want to be out of this for any period of time. So what would get you out of that if the cloud's rallying? Well, I'm glad you asked. So you're going to want to watch that 52.33. And I'm getting granular for a reason. You have some data coming out. You had some data today too that we're going to talk about, but we should also focus on the data tomorrow so we're on the same page. But I want you to take a technical picture of what the heck's going on out there. And then I'm going to show you how we're combating this to make money in the room right now. But before we even get to that, you have to understand the games. It's the same game, but the players have changed is the way that I describe it. So if you can see where you're at right here, you can start to see that they're starting to cross, right? Take a look at the NQ on the 4-hour. They've already crossed. So if you were to go here and say, well, how did that go the last time? And you just kind of mark it off just so you can see what I'm talking about and get to that 26 level. You can see that you broke there. And ever since then, you just had underperformance until what? Till you got your next signal, right? And then you can see here from 26, and then this was your next signal, and now you're starting to fade again. This is not really what you want to see, guys. I mean, I'm just going to be candid about it. It's really not what you want to see. And you don't really want to see it starting to go sideways. Now, the flip side of all this is going to be like RTY, and you're really not going to like this, but let's clean all this off. And so then we start looking at yield, and then you start looking at the 4-hour on the yield. Okay, well, this is when yield was dropping and we were all super smart, right? And then on the 5th, it stops. See how it can't get in here anymore? See how it's starting to turn up? Watch this on the hourly. See how you're getting above here and this cloud just flipped again? Okay, so you're 26 points over, but you can see what's happening here, right? You're getting a complete change in trend. Not only getting a change in trend, but this is really interesting about the cloud. I should do an updated video on this. It would be very helpful now, because here's the bigger rub on it. See that not only the cloud's changing, but see the trend of the cloud changing, and you're being like, oh, well, that doesn't mean much because you could look at the stock. Actually, when the cloud changes, you want to pay attention to it because you can see the change in the trend, how it's starting to lift higher, right? This is becoming an issue, and you're going into non-farm payrolls on Friday. Try not to laugh, but then you come here and look at it on the daily. Do you think that's an issue, that this is getting wider and wider and you're pushing up and you just flipped over back here mid-March? How's your trading been going since mid-March? If you ask anybody, all of a sudden they're not as smart as they once were from January to mid-March, right? Right around the same time that the 10-year started breaking out. Remember, this is all connected, guys, especially right now. You know, I just said it earlier today to somebody, you know, when are you going to stop paying attention to the 10-year? When I don't have to. Right now, we're really macro based. I'm going to take that off for a second so you can just see what's going on here. But we have to focus on what's really going on and what's driving the market right now. And I think we should just start with the econ data. So the economic data today was JOLTS jobs. There was no love lost there one way or another. It didn't do anything for us, didn't do anything against us, right? There was nothing there that we really had to concern ourselves with. And so what we're seeing is a couple things. First here, ADP unemployment is tomorrow, or employment changes tomorrow. Now, a couple things about this employment data. If you watch these videos a lot, you know, I want people to understand what they're looking at. ADP is not BLS, Bureau of Labor Statistics. This is ADP. Okay, ADP is exactly that. They're the data processing. They do the checks. They only use their data. Their data is 30 employees or less on average. That's who uses their checking system, which is fine, but you're going to get more of a smaller market than you are from BLS. That's why sometimes you'll see, you know, ADP have this big number because people are going to smaller companies, and then other companies are cutting, hence non-farm payrolls drops. Also on Friday, we have to go through, and we'll talk more about it. You must go through the data on Friday and see if the jobs are government related or private related. We're going to do that live in the morning as we always do, and we will be on time that morning. But just FYI, is certainly something we have to take a look at. Now, if you have ADP employment change right here, we're going to have to watch this at 8:15, and this is going to drive the market. This is going to be something that's going to drive the market. And we just talked about PMI on the manufacturing side. Now we're talking on the services side, and you can see this very, very clearly right there, okay? So you cannot have both of these expanding over 50, as I explained yesterday, and think that you're going to cut rates. It's just not going to work that way. There's a reason why gold is spiking and silver is spiking. We're going to talk a little bit about why Bitcoin's dropping and the possibility of a big sale out there, but we'll discuss it for a little bit. We're not going to spend a lot of time on it, but you need to watch this tomorrow. You need to watch this really closely because that's what's driving us. Now, if you take a look at the market, we can see what's happening here, right? We can all take a look at this. Then you go look at the dollar. Now, This is where I think where the metal really meets the road. If you start dropping into these sectors, I want to stay focused, but I want to go off on a tangent. So let's just stay focused for a second. So like if I go into these specific sectors, and what we're going to do, just so you can see here, is this is the worst performing sector today. Okay? And yep, you're trading up a little bit after hours. We're going to go to a bear chart here so that this is bright. And believe it or not, people actually copy these, so that's why that little alpha chaser's there. If you are on the wait list, people that are a list went out tonight. Just if you see it, sign up. It's only open for 5 days. If you're interested, link in description to get in. So here we are, and we can see what's going on right here, right? See your little move. All right, watch. Bonk. There's your 55. I use a 12, a 22, and a 55. Okay, you should use what you're comfortable with. Let's make that white. And you can see that right there, the cross, boom. And now you're below the 55. And what we'll do is just show you how significant this move is. Now, as you are aware, I am usually early. So I did try to short the biotech sector recently, and I got stopped out. And it looks like, again, I was just early in what I was seeing, but this to me looks like it's in a lot of trouble. Now, you have a lot of support in here, but I don't know what's going to keep this up, especially, and this is what you have to look at. What's the market telling you right now? The market's telling you that rates are probably going higher, right? I mean, that's really what the market's telling us. If we take a look at energy, you can't get in energy fast enough right now. Okay, we've been talking about these names. We talked about this last Saturday and this past Saturday on what's going on with energy. I would really watch last Saturday's video, specifically on what we talked about with energy. If you have not yet, I'll link that at the end. Remember, if you're new here, first welcome, but all these videos are linked. I link them all together so you can follow along for the week. And it's really important you get this concept, guys, because the last time that energy did this, if we go back and take a look at a weekly chart, and I know we have different issues right now, but look at this breakout, right? Now you go back and go, well, when was the last time that energy exploded like this? Well, it's the last time the market rolled. And then we connect all the dots again. So I'll connect all the dots for you again. And here's the SPY, and here's the Q. And what we'll do, and looking at this, we'll get rid of this, right? And then what I want you to do is come here, and we're going to drop this on the daily. And you're going to see that Q relative to the SPY is below the 55. Now, that might not mean a lot to you, but it means a lot to me. Because when we start to see the Q that far below the SPY on a relative basis below the 55, that is a telltale sign that the Qs are going to underperform. And we're starting to see that. That doesn't mean that you don't trade them, right? That doesn't mean that you don't trade them. And I'm going to walk through exactly how we're going about that right now. But you need to look at where the money is going, and you want to put yourself in a position to follow the money and stop telling the market what it's going to do. So if you have two wars going on that are escalating and they're both in areas where they control oil, do you think crude oil is going higher, right? This is pretty obvious that this is going to drive crude oil higher. So you're seeing names like MPC, and you can see this up even after hours. You're up to 213 tonight. I mean, today we were actually trading this thing and we were able to buy it. I'll take a look and I'll show you. So we were actually able to buy this early in the day. It became very clear what was going on here today and what names that they were going in. And you can see broke out, pulls back, rallies, and just exploded. I mean, it was like that all day. This, VLO is another one that we're in. You just see them lifting. If you don't want to play these, some people will play, I think it's ERX is the bull, but I don't really like that one. It's a little too thin for me. The one that I've been playing around with and doing quite well with is just Gush, and that works. But you can go through all these individual names. MRO, Goldman just upgraded this one. And it looks ready to rip people's faces off, quite frankly, if you take a look at it. And it's really not going to matter the name. Like it's just, it's really just the whole industry in and of itself. You might have some company-specific risk, and there are people that could probably answer those questions better than me. But if you're not focused on energy, I think that's going to be a real issue. So then the question becomes, do you trade tech? And I think the answer is yes. I think you do trade tech, but I think you need to trade it differently, most likely, than you've been trading it. So what we're going to do is I'm going to walk you through a trade that I did today, or that we did in the room. And this is how you should be looking at the market right now. So whenever that NASDAQ SQQ chart that I have, whenever you see that chart, I'm trying to pull this over a little bit. Whenever you see that NASDAQ QQQ chart and it starts getting wonky like this, here, I'll flip to this real quick again, just to refresh everyone's memory. And you start rolling like you're rolling right now. What we do, again, all I'm doing is using a 55. And when I start to act this way, where I start getting this far off and I'm down this many days under it, right? You can see the difference here, right? you can see it. It's pretty clear that we're completely underperforming now versus the S&P. Matter of fact, if you were to take the S&P and do the inverse relative performance, you can see very clearly that you'd go, oh, wow, we're setting up to break out. The 55's here. Let me show you what I mean by this. And you'd go, here's the 12. You'd see that crossing up. And then you go, here's the 22. I mean, you'd be doing cartwheels right now if you were trying to go long that, right? You'd be looking at that going, look at all these pointing up. They're all lined up perfectly. Finally, my stock's breaking out. Well, what this is telling you is that the NASDAQ's going lower, or I should rephrase that the NASDAQ is going to underperform versus the S&P. If you saw this on your chart, you see the 55, the 22, and the 12 all aligned like that, pointing down, you're not going to be happy with your stock, right? So what we're doing is just using the 55 as a demarcation line, and it tends to work very well. And I'm not sure why this area is so exciting, but for whatever reason, when we get here, it acts this way. Now let's get back to the trade. So that said, what we're doing is we're looking for stocks, and this is what you should be doing. I was talking to someone about this yesterday, and like, well, how do you identify which names to trade? One, you're looking for relative performance. So like if you were looking today for relative performance, you would say, well, what outperformed? For example, you would go and take a look at like what made a higher high today. Okay, well, Meta actually made a higher high today, right? Even though the NASDAQ, not so much, right? And so Meta made a higher high today. XLC, how did that do today? Okay, well, that actually held its ground again today. Okay, so that is relative performance. Okay, so even though we actually had puts on this and did quite well with them this morning, but even that's neither here nor there. Point being, what do you do with this? Well, this would go on your list of something to watch tomorrow for relative strength, right? You're making a higher high, NASDAQ's low, and that is one of the stronger of the sectors out there right now. All right, so NVIDIA for me was at a critical level. And I'll just show you it. Again, I use a 12, a 22, and a 55. You should use what you're comfortable with. And I had a real tough time believing that we were going to close under the 22. And the reason for that is because we really haven't done it all year. Last time we hit it, we bounced. When we got near it, just couldn't get away fast enough. And depending upon how you look at this right now, if you want to be super technical, you come here, you look at the number, and you put that there, 894.16, and we closed at 894.52. We closed above it. So we live to fight another day. But that's an area of contention where people are going to try and buy in this area because they want to buy. Most people use the 20. I use the 22. You should use what you're comfortable with. So now I know that this is going to be in play today. And they played it perfectly for us. Absolutely perfectly. They gapped it down for us. Like you couldn't have had it better, right? Because you know all retail is going to panic because now they gapped their stock down. And then once that happens, you can take advantage of them, right? Because we don't trade like retail. You see the double undercut right here. And then all we're waiting for is a real confirm. Now, this is very different than the market that you were in before. And I'm going to show you the timestamps in a moment. Then I'm going to show you how I traded it. But this is a very different market than you were before. So what you're looking for is you're looking for about as much confirmation as you can get without staying in it for a long period of time. So when you start seeing like these higher highs like this, that's really what you're looking for. That's the best you're going to get. And then you're looking at this on a 1 minute, and then you can go and drill it into a 5. And I use some indicators as well. I'm not going to get into all of it, but really what you're doing is you're buying these kinds of breakouts, right? And after you're buying these breakouts, maybe you're even waiting for the higher high or the doji to start playing around in there, but you're using this as your stop. Now, if you just note that for a second, then I'll show you how you should be scaling out of these trades. But I think this is a really important lesson. So it's not that you don't want to try these. So this is what we did in the room today and I put out there. And again, you don't need to do 100 trades right now. Like it's not that kind of environment. So at around 11:09, we just mapped the trade out and I want to keep it a swing trade. So what I'm doing as I'm setting this up is I'm going to stagger the stop and then I'm going to size accordingly so that I can stay in it if I undercut right here and if I took out the low of the day, because I don't want to be playing around with it all day. Why? The NASDAQ's going to underperform. The volatility that you're seeing in the market right now is staggering. I tried twice in here today to buy this. Both times failed. The one that made the majority actually worked finally more than made up for the others. But I tried a couple times and it just, no matter how many times I got a signal, it just would not go. No matter what signal you were using, you were having problems, right? And people say, well, just use VWAP. Well, you used VWAP here, it made a higher high. It didn't go. You used VWAP on a 1 minute here. Guess what happened? It didn't go. And that's the kind of market you're in. So your win rate, please listen to this part. Your win rate is going to be lower. The only way that you're going to sustain areas in trading like this, I'll put this up here. The only way you're going to sustain win rates in this is to understand that your win rates are going to be lower. Therefore, your stops must be tighter. Therefore, you must be more diligent in your trades and you have to take what the market's going to give if you're going to trade technology when you're setting up to underperform. If you're going to trade energy, same game, different players, right? Then you just trade energy the same way you've doing before. But if you're going to try to whack around the NVIDIAs, the Microsofts, the Googles of the world, the game's changed. And so we have to honor that, right? It's just really that simple. So let's drop this to a 1 for a minute now. And then all I'm doing is looking at this. And then I'm just looking at key areas, right? This was a Micron trade we did. We made a little money with it, very little, like 20 cents, 30 cents. I just got out of it. But if you start looking at this, what we're doing, up 6. So at 11.22, what happens? The stock starts rallying and we're trimming out a portion, okay? And then we're doing it again, 11.33, pops again. We're trimming out a portion, right? And then we're holding a portion, 14 trims, and then we move the stop to 8.92, and then we don't get stopped out. Now, these are all levels of interest. So really what I'm doing is I'm watching these levels of interest and I'm seeing how we're acting at them, right? So I want to know how we're going to act at this 892 because this 892 has been a huge level. So you have all your levels in already, right? And then all you're doing from there is you're just moving straight across and you're just watching how we act and how we held that level. Because you want to make sure, even though you reject here, you'll note something about the trade. It kept you in, right? So you want to see, does previous support, which is here, does that become resistance? And the answer was no. But you did get Matumboed up here, so now you denote that. You're starting to see how that line is just complete rejection. So now you know where your area of interest is and where your current resistance is going into tomorrow and support. This is how you need to be trading these if you're going to be trading technology right now. You just have to take what the market can give you. I keep this account, and the account it's pretty simple. Let me just pull that down just a little. And what I'm doing here is just showing the trade live. So this is where I got in, and then what I'm doing is pulling it out, and then what I'm doing here, I still have a portion of it on. But what you're doing is you're selling into the strength, right? And I'm not selling a lot, like I'm selling 25%, 250, 250, I'm holding, and then you're just marking your demarcation lines just like you were doing there, right? I mean, it's the same exact thing. And all you're doing with this, all you're trying to do, I'll just drop that there, is you're putting yourself in a position to know where you're at. Oh, I'm going to scale out. I'm selling into the strength, right? We don't want to be in a position where you're selling into weakness. We want positive slippage. Okay, so even here, when we start to pop over and we start to roll, well, we know 900 is going to be a problem, or we know it's going to be an area, let me rephrase that. We know it's going to be an area of interest, right? So then we're able to just pull portions out of these trades over and over again. And then I just move the stop to 892 and tomorrow brings what it does. But you're selling out into the strength in these kinds of markets in specifically because you understand that this is not the kind of market where tech just rips. Now, I hope you find that helpful. And the one thing I really want you to take away from this is if you're struggling right now, everybody's struggling right now. This is not an easy market. The market shifted. If you go back and look at your trading, and I recommend that anybody that wants to do this, they should be keeping a journal. And I just want to say something. I do appreciate all your comments. I do appreciate you sharing these videos. The amount of support that I'm getting from people in the emails, it's greatly appreciated. And it makes up for me not running ads in the middle of it because that's what the algos want. But I just want to talk about this for a second. And I do want to go through smart money, dumb money, because there are some changes there, but I'm going to have to cover that tomorrow for time's sake. I try to keep these short and sweet during the weekdays for people. Now, National Association of Investment Managers. And what they want to do is, are you bullish? Are you bearish? Anything over 100, really, they're telling you that they're on margin. I think it's very telling of a couple things here. First and foremost, if you look at this January, July, August, this is where the market put a top in last time, November, December. This was kind of interesting. This is where people got bearish, okay, even though you were going into the end of the year and then you can kind of see what happened there. I thought that was kind of interesting, but November is where they got bullish, right? And this is where you're at now. So you're really in uncharted territory right now. What we need to do tomorrow are two things. We need to watch the reaction to the economic data. That is the first thing that we need to do. You want to see the reaction to the ADP unemployment, and you want to see the reaction to the ISM services PMI. That's first. Second, start watching this. This is stocks above the 200-day moving average, S5TH. Anybody can watch this. I think you can go on TradingView and watch it for free. We'll probably get more into this tomorrow with smart money, dumb money, but it's really important that you pay attention to this. Every time you've gotten up in this range before where you have this percentage over, every single time that we've had this percentage when we're over, we're pulling back. And you should be able to see that. If you mark these levels here, January 22, February 23, July 26th, all of these areas, this was right before, obviously 24 and where we are now. All of these areas have had one thing in common. They have all marked short-term tops or long-term tops on the S&P 500. So we're going to want to watch this very closely. That's it.